All right, let's get into it. We're talking about the wild story of how a video game store, one that was really struggling, suddenly became the epicenter of a massive financial showdown. It was Wall Street's old guard versus this new army of regular people online.
$483. That's the number. That was the peak stock price for GameStop on January 28th, 2021. Now get this. At the start of that very same month, the stock was hovering around 17 bucks. So the big question is, how in the world did that happen? Okay, so to really get how this thing exploded, you have to understand this setup. It was truly a perfect storm. You had a company that looked like it was on its last legs, a really risky trading strategy being used against it, and then this brand new, super powerful force that nobody on Wall Street saw coming.
So you've got this classic David versus Goliath setup, right? In one corner, you have the Goliaths, the big Wall Street hedge funds, the pros. They were all betting big that GameStop was going down. I mean, a physical video game store in an online world, they saw it as a dinosaur. But in the other corner, you had a new kind of David, this huge, fast-growing community of everyday investors on a Reddit forum called WallStreetBets. So what were these big funds actually doing? They were short selling. It's kind of like this. You borrow something you don't own, let's say a share of stock, you sell it right away for the current price, and then you hope the price crashes. If it does, you buy it back cheap, return the share you borrowed, and you pocket the difference. Simple, right? Well, here's the catch, and it's a big one. The risk is literally unlimited. There is no limit to how high a stock price can go. And all those bets against the company, they created a massive vulnerability. See, if the stock price starts going up instead of down, those short sellers start losing money fast. They're forced to buy shares to stop the bleeding. But here's the thing. All of that buying just pushes the stock price even higher, which forces more short sellers to buy. It's this insane feedback loop, and it's called a short squeeze.
And this is where it gets just wild. By January of 2021, about 140% of GameStop's public stock had been sold short. Let that sink in. More shares were bet against the company than were actually available to trade. It's like the fuse was lit on a powder keg. The stage was set for a squeeze that would go down in history.
So you've got this incredible pressure cooker of a situation. Now let's talk about the spark that finally lit the fuse thanks to a few key people and the unbelievable power of the internet. At the heart of this whole thing is a guy named Keith Gill. You might know him as Roaring Kitty on YouTube or by his Reddit handle. Now, way before this became a global phenomenon, he was posting his research, making a very detailed case that Wall Street had it all wrong about GameStop. His deep dives and his genuine belief in the company's value, well, it got a lot of people to listen. And then on January 26th, the movement got the ultimate signal boost. Elon Musk tweets just one word, GameStonk, with a link to the WallStreetBets subreddit. That's it. That one tweet was like pouring rocket fuel on an already raging fire. The stock just went ballistic in after-hours trading, and suddenly the whole world was watching.
And the effect of all that attention was just insane. The subreddit didn't just break its traffic records, it absolutely shattered them. And get this, in just a couple of days, it added more than 1.5 million new users. This thing went from being a quirky corner of the internet to a full-blown mainstream movement basically overnight.
Okay, so now you've got millions of regular investors jumping in. The short squeeze is on full force. The price starts going completely vertical, and the market descends into total chaos. I mean, just look at how fast this all happened. That last week of January was just nuts. The stock goes parabolic, trading gets halted over and over again because it's so volatile. And then, right at the absolute peak of the frenzy, something happens that nobody saw coming. Major trading platforms, especially Robinhood, just stopped people from buying the stock. And that decision to turn off the buy button, while you could still sell, mind you, it caused an absolute firestorm. People were furious. You heard cries of market manipulation from everywhere, from politicians to regular investors. The accusation was simple. They were rigging the game to save the hedge funds. Now, the official reason given was a lot more complicated. The broker just said the system was just overwhelmed. You know, behind the scenes, there are these things called clearinghouses that act as middlemen to make sure trades actually happen. Well, with all the crazy volatility, they basically turned to the brokers and said, you need to give us billions of dollars in cash right now as collateral.
When a platform like Robinhood couldn't cough up that much cash instantly, they had to hit the brakes on buying to reduce their risk. So, after all that chaos, once the dust started to settle a bit, who won and who lost big? The financial fallout here was truly mind-boggling. Some of the big hedge funds that were betting against GameStop, like Melvin Capital, got wiped out. We're talking billions in losses. They eventually had to close up shop. But it wasn't a simple story. Some other big investors who had bet on GameStop made an absolute killing. And for the regular investors, it was all over the place. The folks who got in early, some of them made life-changing money. But a lot of people who jumped in at the very top got burned badly. But this whole thing was way more than just a wild week in the market. The legacy of the GameStop saga really changed the game, and we're still feeling its effects today. The aftermath was immediate. Suddenly, you had hearings in Congress, the CEOs of Robinhood, of big market makers like Citadel, even Roaring Kitty himself, they all had to testify. Lawsuits were flying everywhere. The SEC launched investigations, and suddenly everyone was talking about these complicated market mechanics like payment for order flow. And yeah, this is where the term meme stock really entered our vocabulary. And believe me, this story is not over, not by a long shot. Just to think about this. In May of 2024, years after the big squeeze, Keith Gill comes back after a long silence and posts one single mysterious picture online. And just like that, GameStop's stock shot up over 70% in one day. It just goes to show you, the power of this movement is still very, very real. Which brings us to the big, lingering question. Was this whole GameStop thing just a fluke, a perfect storm of lockdown, stimulus money, and boredom? Or did it fundamentally change the power dynamic on Wall Street forever? Has the game really changed for good? This is not financial advice.